Good having you here with us, Bron. So, Bron, what are some trends that we are seeing in the physical gold market?
Well, I think the physical market's showing a bit of a shift now. Before it was moving sort of west to east, but we've seen a lot of inflows into the ETFs, corresponding at the same time, however, with sort of weakness in imports into China, as well as real discounts on gold in India. So it's sort of been a bit of a counter shift where as the price has moved up, Western investors sort of chase the price. But you have Asians probably coming off a little bit, being a bit more cautious. So it's a bit of a reversal of trend at the moment. I think from my point of view, going forward, we're probably going to see the price going sideways. I know a lot of people have been calling for it to rise, but I think after such a big bear market, it's going to take a while for confidence to reassert itself. So I think the run up, I think it's pretty clear that the price has bottomed. I don't think many people are expected to break below 1050 again. So I think it has got a base, but it's going to take a while for confidence to return. And I think we'll need to get into the 1400s consistently before we really attract investors back in. So at the moment, I think I'm still hearing that a lot of old longs, stale longs, so people that bought maybe in the 18, 17, 1900s, that level, they see any price surge as a way to get out, and they're selling into that. So I think that's capping the price, as we're seeing old investors who have sort of had enough of gold getting out, and we're seeing new investors coming in. So I think there's still some working through of those type of investors in the market, and so I think we'll see the price really going sideways. And then maybe once it gets ahead, builds more sort of base, then we'll see new money come in.
It's very interesting that you pointed out the change in physical flows now that we've seen a bit of a spike up since the start of the year. Do you think this is a lagging sort of effect where, let's say the price that's shot up early in the year was maybe based out of the paper markets of gold, and then now we're kind of just seeing lagging effects on physical gold. What are your thoughts on that?
Look, I think it's a bit hard. Paper markets tend to be driven just by speculators, and it's a bit hard to put too much strength, sort of too much confidence in those moves, because a lot of times that money's leveraged, and then those people have to sell out, and they're looking to sell out. They're not long-term holders. So any speculative money might drive the price. That might help to bring some long-term precious metal investors in, but it's not something that I suppose we can rely on as a driver for the price.
So in terms of price discovery, let's say over a longer period of time, what is the paper market's role in doing that?
Look, I think paper market does provide liquidity. I know that there's a lot of talk about turnover, and speaking at Mining Investment Asia this week about that, and my presentation's titled "Why Hasn't the Bullion Banking System Failed Yet?" And in that I talk about a lot of these sort of things that drive, and one of those is turnover. So a lot of times people consider high turnover a negative. High turnover is a positive. Any investment manager, indeed if you buy a stock in a company, you look at the company share price, if you don't see any turnover and trading in the shares, you don't buy that company, because you go, hey, I'm not going to be able to exit. So high turnover in precious metals is a positive. It means that you can get out of your investment. So there is that function that speculative flows provide. But they also, so it does help facilitate the physical market. The question is whether they dominate too much. But in the end, any driver by speculative money does affect the spot price. It has to, because it's seen arbitrage. There's too much of a gap between what's happening in a futures market and what's happening in the spot market. Then the spot market's either going to move up, or arbitrageurs are going to sell the futures and buy spot. So it's going to compress it down and tie those two markets together. But they do act like an elastic band. So futures and spot can move. One could be, spot could drop and it will drag futures with it. Futures could move up and drag spot with it. So they're both sort of working together, and it's hard to discern unless you're looking at it in detail to find out, well, what's driving the price? Is it the speculative element that's pushing up spot and dragging it up by arbitrage, or is it the other way around? So it's a bit difficult to sort of get that, I suppose, for a lot of investors, but that's something that we do at Monetary Metals, is really look at that spread and trying to discern what's going on underneath.
Would then your horizon be rather short term? If you're looking at, let's say, the different futures contracts for the upcoming months. Yeah, I guess the question is, what kind of time horizon are you guys looking at?
Well, look, a lot of the futures obviously have a lot of the liquidity in the shorter end stuff. So, I mean, if you go out 3 years, 4 years, there's not a lot of liquidity in trading in those contracts. So I think those prices are less reliable, maybe in terms of getting a signal. So I think you can get a clear picture 3, 6, 9, 12 months out to get a sense about what's happening in the market. Yeah, that's about as far I think you can go.
Okay, very good. So I'm going to move back to the physical flows. With the immense flow of gold that we're seeing from the west to east over the past 3 years, what's your take on China's gold policy? You know, are they going for a gold-backed currency? Is it just simply a power play for bargaining power? What are your thoughts on that?
I don't think they're going back to a gold-backed currency. I think that if you read between the lines of some of the stuff that they've done, they obviously want to support the gold market. I think their view is that either central bank or officially held gold is sort of certainly one key element of what they're about. So they are accumulating it, whether it be public or whether it be through state-owned organisations or sovereign wealth funds. So they do accumulate metal in that sense. But I think also the opening up of their market for the retail investor is also about getting gold in the country and having it held by retail investors. But I think politically the government considers that almost the same. So as long as the country itself is holding a large amount of metal, I think they see that as giving themselves, I suppose, a firm base. I don't think it's part of a sort of big geopolitical currency reset type thing, because there's still government entities that benefit from a fiat currency. So I don't see any necessarily long-term strategy to move to a gold-backed currency. I just think they think it's probably prudent that either they officially or that the public themselves hold gold as a stable store of wealth. Yeah.
Some pundits often base their valuation on gold in the home currency that they're familiar with. So, for example, the US dollar or the Aussie dollar. How would you respond to that? And is there a better way of measuring the value of gold?
Look, I think it's, for most investors, pretty unavoidable. It's very hard to get out of the mindset of trying to think in ounces and trying to think of always holding gold in ounces and trying to grow the ounces. So, yeah, local investors do look at their home currency. That's just the reality of it. The thing in my experience is, particularly from, say, an Australian point of view, is a lot of investors actually don't really understand the currency overlay. A lot of times I would have had clients call up and say, oh, the gold prices went up, I want to sell, and then the price is actually lower in Australian dollars. And they go, wait a minute, what happened? And I said, well, the exchange rate changed. And they don't look at that exchange rate sometimes. And that's obviously because most media quote, even in other countries outside the US, they quote it in US dollars. So a lot of investors in countries get a sort of representation of what the price is doing. So it's a bit hard to break through that. I think investors need to think about their holding in gold as something, as a savings, where they're looking at it in ounces of gold and trying to grow the ounces of gold, rather than trying to look at it in a dollar value sort of approach.
So where can an investor start learning about how they can go about doing this? What kind of frameworks, or is there a mindset that you got to take on to start seeing things this way, or what would your advice be? I think,
look, it's just an education process, and to be honest, I think from what my understanding is a lot of investors who come into gold sort of split into groups. There's people that short-term want to make a profit, that they're just going to buy gold and then they're going to sit on it for a short-term period and trade it. There are others that maybe have a sort of more cyclical macro view, but again, they're still looking to get out at a dollar profit. And so it's very hard to get those. I mean, if that's the attitude, they're not really going to delve down into understanding gold, doing research. You know, they're not a high commitment to the precious metals. I think it's those investors that sort of get into gold, get intrigued by it. Maybe they don't get it looking at it from a monetary point of view. They just sort of think it's a really interesting market. And they'll go on the internet and they'll start to research. That's maybe where I suppose they get a sense of, actually, as you start to go look at all different various blog sites and commentators, that you'll get a sort of probably a more alternative sort of understanding about precious metals and start to think about it in a different way.
Well, that's plenty to leave our audiences thinking about. It's been a pleasure having you, and thank you once again.
Thank you.